Hey there, YouTube. Steve here, and coming off of finals week. Um, and I did pretty well. Haven't been able to focus as much on trading, so I've been only making a few very, very short term trades on my actual live account. Whereas with our simulation here, I've just kind of let it run wild and into the dirt, really. Uh, which goes to show you that you should not only rely on indicators, which, any good trader is going to tell you that price action, things like that, are a lot more important. But anyway, so another one of the issues was that before all of the trades I was doing on a 12-hour time frame. Problem is that I never designed any of my scripts to go off of that. With the S&P E-minis, for example, I designed that to work off of an 8-hour time frame for swing trading. So every day it would check to see whether or not the right conditions had met at 10 a.m., 6 p.m., and 2 a.m. And I'm a bit of an insomniac, so that wasn't really too much of a problem for me to deal with. I tend not to be actively day trading short term in the overnight sessions just because I never really had a whole lot of luck doing that. So, yeah. But anyway, I've made some adjustments here to our settings. Uh, and so I think for the S&P E-minis, I'm going to switch over to the 8-hour time frame, but for everything else, I'm going to do on the daily. Um, so I'm still winding down from a long, long semester going for my second degree, and so I am understandably tired. Um, and so far we are sitting on a loss of nearly 40%. Ouch, absolutely terrible. Um, One of the things as well that was wrong with this experiment from the start is how when I had that script on, working off of my oscillator here, uh, it wasn't triggering every time that it should have, which sometimes was beneficial, sometimes not. Um, but if we're going to be doing anything automated, obviously we want it to be reliable here. So for moving forward with this whole scenario that we have going on here, I moved over to my other script, which is based off of a heavily modified version of MACD that handles wide price movements a little bit better. Any of you who have been trading for a while and have used the MACD in the past, you've probably noticed that it is good for finding direction only up to a certain point. Sometimes you'll have a crossover and the trend will keep moving forward. So the way that I used to combat that, um, back when I was still using indicators and stuff on my day trades, was that I would have my MACD and my oscillator moving in concert. So whenever the MACD was crossed over, crossed under, whatever the situation would be, um, I would look at the oscillator and see if it's in the overbought range, then I would stay long until it would come out of that range. If it was in the oversold range, then I would stay short. Because in my experience, like you can see here, where we're looking at gold right now, and like if you had started shorting the minute that it went into overbought territory, then you would have been completely screwed on this rally here. Whereas if we're going off of the MACD, we get a long here, and because I switched over to that script, and this one actually works. Long here, doesn't have any cross unders for the MACD, and then we have our short position here, and that's a pretty wide range. Um, I like to keep things nice and simple most of the time. I like to trade as little as possible because overtrading has definitely been one of my largest expenditures in the past when I was first learning all this stuff. Even with the micros, like, if you're hopping in and out after one point, well, there goes a huge chunk of whatever you're making for the day. So, not good. Anyway, moving forward. I'm not going to bother with resetting our equity here because it doesn't really matter. It's fake money, and I'm only doing one contract per trade. So we still have a ways to go before I will actually have to tell this whole thing that, whoops, we need more cash. So right now, we don't have a crossover here yet, but we do have a crossover here. A crossover here. And it looks like there's about to be a cross up. So I'm just going to leave this position long for now. We'll see how that goes over the rest of the week. Of course, we've got the holiday week, so things have been pretty wacky anyway. And I'm glad that I was taking the time off from actually trading my live amounts, just because I was too focused on too many other things. Alright, so moving over to the 10-year. We are currently short on this, and it looks like we do kind of have a symmetrical diamond forming here. So for the time being at least, I'll give it another day or so before I decide to switch this to a long position, because with the FOMC talking about tapering but leaving interest rates the same, I don't see bonds being bullish anytime soon, apart from the normal large intraday swings here. So we can pretty much leave that as is. One of these contracts only down by 156 bucks. That's really not that big of a deal. So taking a look at the Russell here, and we are long because I hadn't bothered to switch over from the original script, which was all over the place. It's not reactive enough by far on the daily to look at, whereas if we switch it over to 8 hours here, all of a sudden you're actually catching like the big moves. Like, yeah, you're getting shaken out a whole bunch, but you can catch these big rallies, catch these big falls. It's not that big of a deal in comparison to the daily. And the problem with the 12-hour was like the same thing. Yeah, it's faster than the daily, but it's not nearly fast enough. Like, when there's this really big swing like this, then yeah, sure, you're fine, but I'm not great at trading the Russell anyway. I know a couple of guys that are good at that, not me. I'm much more of an S&P guy, or if I'm feeling especially adventurous, micro NASDAQ on the daily, or sorry, the day trading. So moving on to the S&P, we got short signals across the board. Of course, we are negative because we have had some major rallies with the whole Biden talking about how his Omicron response is not going to have more lockdowns. We'll see how that goes. But for now, it looks like I will get shaken out of yet another position here. The S&P has taken a huge chunk out of this portfolio, but whatever, it's fake money. We're doing an experiment. It's fine. Yeah. So, like I was saying with the S&P with the 8-hour, this is literally the thing that I was designing the 8-hour around, because it's fairly reactive. You don't get shaken out too much. It's not that big of a deal. And then here's where we're seeing what I mentioned with how you'll get a cross under with the MACD, even though you're either flat or even somewhat bullish, which is why I was using the oscillator down here, which would have benefited from those moves actually. And yeah, so a lot of volatility right over here, but again, it's still something that I'm working on, and I just haven't had the time to put into it. I have done well enough where I've been able to pay my bills doing this for the last 2 years now. So, but of course, I trade the micros because I have no tolerance for taking huge losses like that. To a lot of you guys, $3,000 might not be much, but that is a lot of money to me. And so I keep my risk tolerance very, very, very low. So I'm going to move back onto the daily, which again, very, very choppy moves. The oscillator would have suffered here for the most part, although it also would have caught like this entire move up. So you'd be rewarded for that. I'm still developing my craft, but As long as I can make money and have the probabilities come out in my favor, that's fine. Alright, so taking a look at silver. We currently have a short position. Yeah, I think silver's going to rally from here. So we'll just take that hit. Silver futures, I haven't really had a lot of experience with. I've mostly traded with options on SLV. Back when it was still around like $16 per ounce. I remember I made a really great trade a couple of years ago where I just kind of loaded up on calls just a month out, and it rallied up to 24.5. So that was a very good month for me. But I don't really consider myself a precious metals guy. I like the price action on silver a lot better than gold, though. But I also much prefer just doing options as opposed to gold on here. It's just how the price action is. Moving on to oil, which had a hell of a year. I did pretty well with the, I mentioned in one of my other videos where I bought it around 68 and then sold it like 80. So looks like that's about exactly where this script would have put me. Although it would have worked with the original oscillator as well. Basically what I was doing was I was using the, not the script for the oscillator, but just this oscillator itself and manually making adjustments. I was long and then short. I'm currently short on my main account, but long and then short on the second closest contract to expiration, and then I was running the closest one on either a 1 hour or a 5 or 15 minute interval, depending on how much attention I could spend on the market. Yeah, I had an exam in one of my stats classes, and I could feel my phone vibrating with the alerts telling me to change the trade that I was in. And when I came out of the exam, I was just like, ah, crap. I'd gone from like a $300 gain on it to a negative 150, and I was not very happy. And I'm already not really a math guy, but you know, I mean, I got an A on the exam though. I got an A on all of the exams in that class somehow. I'm not great at math though. So, natural gas. Same thing I've been saying in previous videos. We currently have no signals across the board. Natural gas is, again, one of the ones that I like to trade off of macro factors rather than actual technical analysis. I'll do the setups for my trades on the technicals, but the macro factors are, I usually start to accumulate a position in the springtime towards the midsummer. Bonds, finally we have a winning trade going on. We are short one position and we are short on the indicators, so we're not going to touch that. But again, I don't see bonds going severely bullish for a while, just because of how the Fed's been with rates the last few years, well, the last decade now. Yeah, that's pretty much all I wanted to cover tonight. Because I didn't make a video yesterday, and I wasn't feeling that great, because I'm still coming off of my semester. So yeah, nope. I hope some of you found this useful, and I'll see you next time.